I'm Charlotte McLeod with investingnews.com, and here today with me is E.B. Tucker, editor of the Tucker Letter. Thank you so much for joining me. Great to have you online as usual.
Thanks for having me back.
Of course. And, since we last spoke, we're introducing you in a new way. We're mentioning you're editor of the Tucker Letter. So I want to start there. You started this newsletter. People can read it online. Let's talk about that and why you decided to start that newsletter, what you're offering there, how it looks.
Well, it's my full-time focus, Charlotte. I'm really excited. People can find it at ebtucker.com. And a lot of people know that I used to write newsletters for some of the largest newsletter companies in the world. And one of the things that was really tough for me was that writing the newsletter was something that I enjoyed so much. But those companies really are 99% marketing companies, which is okay. But it turns into where you're doing all 99% marketing, and then it's really challenging to do what I love to do, which is to write. And the reason I love to write is because I think people enjoy reading pure writing. And so ebtucker.com is a place where you can read every other Thursday. I put out exactly what I'm thinking about things using stories and stuff, but it's me writing to you. There's no staff. There's no editor. I pretty much write with, by the time I publish, there's almost no mistakes, but there's no agenda here, and there is a paywall down lower. So you read the whole thing, you hit a paywall, but you can read a lot of stuff. And for people that are younger or people that are just starting out, you can really read a ton without having to pay. And it's important to me because I was one of those people 20 years ago or more that was reading stuff, and I didn't really have the means to subscribe to all the things I wanted to subscribe to. And so I wanted people to feel like they can touch me there without having a wall between us. It's very important to me. Now, it's really hard to figure out what's going on right now. So a lot of times people say to me, like, what is happening? What's going on with the economy? So the same old questions all the time. And I understand what's happening, and it's difficult because what's the forum for me to? I can't just. Yeah, I'd love to talk to you every 2 weeks, but I can't do that, of course. And so the newsletter becomes a way that I can reach people and can say, this is what's going on. And we live in this bizarre time where what happened, I wrote this article about draining the pool. And I think people need to understand that a couple of years ago, we put a couple $1 trillion. It was this grand finale, like a fireworks show of the free money era. Okay. So we had this like 10, 12-year era of free money, 0% money. Any idea worked. You could have it's really hard to fail when the cost of money is 0%. And then we had this huge tidal wave at the end of it, and we put trillions of dollars in the system. What happened? Well, Bitcoin hit 70,000, and Pancake Coin, my personal favorite coin, hit 7 billion market cap. That's $7 billion in digital tokens that were going to change the way we consume pancakes. And it's not a joke, because there is a pancake coin, still has 250 million market cap, which is bigger than most of the gold companies now. And so what we're dealing with now is that people don't know that someone pulled the drain at the bottom of the pool. So the average person is asking, give me a stock tip. And what I'm saying is, like, you don't want to swim when they're draining the pool. And what you should do is go have lunch. And then the pool is going to eventually go the other way, and you won't be, down at the bottom by the drain, all fatigued. You'll be refreshed from lunch and a siesta, and you'll be ready to swim again. And so in the meantime, we got to spend our time sorting out, when do we think this switch is going to come? And I last week in the most recent issue, I explained that I think that there's a way we can watch this by watching interest rates. It's really easy to do, and I explain it so that anyone can understand. But that's what the letter's all about. It's like, how does E.B. Tucker see the world? ebtucker.com is how you see that, and it's only every other Thursday. There's zero marketing. There's zero bothering you. There's zero, nobody else is going to email you from me because there's no other employees. So it's just me. And it's really important that people know that that's the place to find me. And if you don't want to find me, then you don't have to go to ebtucker.com.
Okay, thanks for going over that. So that's the unfiltered EB. That's what you're working on right now. That's the focus. Going to come back to some of the things that you mentioned going over the newsletter. But first, I want to talk about current events going on right now. And I think top of mind for a lot of people is the war that's going on in the Middle East. This is a really big topic. And I don't want to detract from the serious implications at a broad global level, but I did hope you could kind of look at it from an investor perspective for us, because I do think we have people who are sitting at home wondering, what does this mean for their strategy? How concerned should they be? So I wondered if you could weigh in on that.
Well, what happened to the war in Ukraine? I mean, that's, I'm always, saying the thing that's interesting about the war in Ukraine is that I've been to Ukraine maybe 6 times. It really bothers me when people call it the Ukraine, because it's not actually the Ukraine, just like it's not, the France. But anyway, I would walk around and I would see all these like signs about, killing Putin or something and supporting. And this guy that I'm friends with was telling me he kept sending $20 a month for them to buy Javelin rockets. So it was crazy. And I asked people, can you find it on a map? Well, I don't need to find it on a map because I have the flag in my yard and I support whatever. Okay, now it's all done. There's zero news about Ukraine. The whole thing is still happening. Zero news. All Israeli conflict news. Okay, both of these things, like you say, are very serious. The reason why they're serious is because there's a lot of bloodshed, and it's really it's terrible when you have these conflicts, because the problem all the time is that the bloodshed is never experienced by the people that really are at the heart of the conflict. There's always unintentional bloodshed, and that means people are dying that have no business dying. It's awful when this is happening, and so we sit back here as investors and we say we have to be responsible for the things we can control, right? And it's like, unfortunately, we have to maneuver based on our life, because I mean we didn't choose this situation, and we can't really do a lot to affect this situation in the short term. But we have to look at this and we have to say, okay, you have this flare up. It's not going to flare down quickly because there's a lot of dynamic parts of this situation going on. I don't know if people know this, but the Chinese have reached a deal with Saudi where they have a Confucian Studies department in all the colleges. They have multiple nonstop daily flights from Saudi to China. They have constant dialogue and agreements on many different things, and China's acting like the broker of peace. Now, what does that have to do with Israel? Well, Saudi was just about normalizing relations with different parts of the Middle East, including Israel, also with Iran, which they don't necessarily agree on everything, is very, very different cultures. And you see that there was a call, with Saudi and Iran leadership. There's a call with Saudi and China leadership. All this is tied together. And then you have the U.S. flaring up the situation, everyone's choosing sides. Everyone is tense. Everyone is ready to fight. And they will be, fighting to one degree or another. And you sit back as an equity investor all the way in North America and you say, the only thing you got to focus on here, short equities generally, long energy, long precious metals, and short term, you can be long rates. Long term, interest rates are going up. So you have a lot of moving parts here. And that's all separate from the fact that there's unnecessary bloodshed by people that don't deserve it. It's very complicated. And then people sit around and they're like, well, is the stock market going to go up? No. I mean, it's crazy. It's crazy. So anyway, so it gets back to this original thing of like, you're in this time where it's really hard for people to sit in a 5% savings account. They just can't do it. They can't do it because they think they're going to miss out on something. But what you're going to miss out on is unnecessary bloodshed, difficult equity markets, volatile at-risk assets. And you say to yourself, you look back and you say, I mean, I remember about a year and a half ago, I think I said on your show, the thing to do was to buy treasury bills. That means, less than a year. You can buy 4-week, 8-week, 13-week, 6-month in the U.S. and they pay, like you can see over my shoulder. I have them 5.5% on the 8-week bills. That's a lot. Okay, do that and then go to a Fish concert. And everybody thought that sounded stupid. But the reason why you go to a Fish concert is because Fish is the greatest improvisational rock band alive, and you can still see them in their original form. And it distracts your mind because not because you're taking drugs, which I don't take drugs, but the thing is you're watching a musical performance. You're watching the arts. Well, why would you go watch the arts when you have a financial problem? Because there's nothing to do. There's nothing to do. Like, you're not missing out on something right now. It's a very difficult time to speculate and to bet and to gamble and to push on your bets. The last 2 years has been like this. 2 years November, if you notice, Bill Gates, Musk, all the big guys took a lot of money off the table in Q4 of 2022. Research this and you can see, took a lot of money off the table. Bitcoin was at a high, NASDAQ was at a high, SPACs were at a high, tokens were at a high, Pancake Coin was at a high, everything. And everybody was like, what's next? What's next? And all the big guys took money off the table and they got really quiet. They sat around and they're still sitting around. And I think people need to understand that when the tide is going out, get out of the water. Just get out of the water, because sure, you might have some fun in the water. It's possible, but you also might cut your leg on an oyster reef or something. And so when the water's going out, you get out of there and you wait. People just can't do it. You'll notice this. They can't do it. They got to have action. They got to have action. And it's the gambler mentality, which is okay when the tide's coming in. You want to be like that. But the problem is people have a hard time saying tide's going out. It's not a time to gamble. But we're getting into the serious part of that. It's still happening.
So we're in this waiting period right now where, as you said, people shouldn't necessarily be playing in the water right now. There's a lot of instability going on right now. And I wonder things that how we have going on a little bit closer to home. We had the Fed continuing to grapple with inflation. We have all this bond market instability. We seem to have been teetering on the edge of a recession for more than a year at this point. And it seems like the Fed is holding things together a lot longer than people expected that it could. So why is that? How has that managed to happen?
No, it's financial alchemy, but you're right. I think they've surprised themselves. So what happened is that you inflated this gigantic debt bubble at 0%, and then all of a sudden, overnight, you go from 0 to 5.5. Boom. If you notice, it wasn't like this. It was straight up, and it was really radical when you think about it. And the reason why they had to do this, go up on an elevator and not the stairs, is because going up in the elevator, everybody says, this will never last. But what's going to happen is we're already in a recession. Business is already slowing down. You can ask anybody. All you got to do is ask around. Now, for instance, I had a really hard time. I have a couple of cars, okay? So I wanted one car in February of 2022. I went to the dealer. They had the one. It was the only car they had. So it happened to be what I wanted. I just bought it. They charged me full price, full sticker, which never happens, plus a fee. Get this, a fee called a market adjustment. I didn't care. I paid it. It's fine. But now when I send the car to get worked on, the salesman's like, hey, we got a lot of cars right now. See what I mean? So the reason why I'm interested in that conversation is not because I want yet another car. It's because you notice that things have slowed down a lot, right? So like if you want a pool built at your house, or if you need a fence or something, you can get these things done. I mean, you can like have the estimate and then you have somebody come over and do it within like a couple weeks. Okay. Whereas before it was like, forget about it. I mean, it was like you worked for the car guy. I mean, they were like arrogant about it. This is the only car. It's like super high demand. I'm like, yeah, whatever. But that you got to see these indicators. So we're already in a recession. And what happens next? Well, business slows down, revenue slows down, costs are up. The business says, hey, we borrowed this $1 million at 3%, and we got to get another $1 million. And the lender says, going to be 8%. And the business says, we can't afford it. Well, do you have $1 million? No. So you got to pay 8%. Okay, well, we got to raise prices. Well, we can't because business is slowing down. See how this goes? Now, all of a sudden, then the Fed has to emergency take action and come to the rescue again. But the thing is, it's not going to happen yet because the Fed wants that to happen when the yield curve has straightened itself out. And I know that's a complicated phrase for people, but you have to understand it should cost more money to borrow, 6 months, a year, 2 years. Like if you have a 10-year mortgage and you have a 30-year mortgage, it should be a lower interest rate for the 10-year mortgage because it's less time, right? The 30-year mortgage should cost more because it's a long time. Anything could happen. So the problem is it's backwards in the U.S. right now. So it's like it costs, the U.S. government pays more to borrow for 4 weeks than it does for 10 years. And that's backwards. And so I think the Fed hopes that that straightens itself out. They're trying hard to straighten that out before they have to come with the rescue hose and spray us again with, it's not going to be free money this time, just to be clear. I don't think you're going back to 0%. I think what they want is to straighten that curve out. That's what they want. This is highly unusual to be upside down. And everybody know, all the professionals know it. Now, the average people don't know it because they don't understand what it is, and they're too busy for that. They just need the stock pick so they can go back to playing Candy Crush on their phone and make some money while they sleep, and not do any thinking. But the reality is all the professionals realize like it's a huge red flag when you have this upside down yield curve. It's gotten a little better, by the way. So it's like, but the problem is once it straightens, it normally means that you've entered like a heavy recession because it's been out of balance. So you go back. So I think the Fed is standing by saying it's got to be soon. And, back to the original question, which is like, if you're the average person, I mean, if the Fed's saying it's got to be soon, like, what are you doing? Basically buying penny stocks. I mean, like, you're crazy. I mean, it's not, I mean, I own some, like in the newsletter for the paid subscribers, we have a portfolio. It's a portfolio that I manage for a small trust. I'm the trustee for the trust. I could be fired from that job. It's very complicated, but I published the stock portfolio that I bought for the trust. And people are surprised a lot of times because they'll say like, why do you like this stock? It's down 5% this year. And I'm like, look, this is a great business. I mean, it makes money, pays a dividend, has manageable to low debt, and they just don't make these businesses every day. Like it's really hard to start this business. It's a really solid, and the people that run it are really solid, and I want to own it. And I want to own it because I'm an owner. I don't want to own it for a week and then sell it. I mean, like this business makes something that is necessary, and we're going to own that. And so people have not liked that. I mean, we do have some stocks up like 25% this year, and of course people forget about those, but they're like, it's too slow, I need action. I'm just like, look, I mean, even the best business right now, you're going to be in a place where it's probably not going to be flying into the stratosphere in a year like this because money's coming out. There's a lot of money coming out of the market. I mean, seriously, there's insider money coming out of the market. There's companies that are going out of business that are coming out of the market. No SPAC deals are getting. I was just with a banker in New York that was telling me that all the SPAC deals they did are being unwound and refunded, and they're desperate for deals, and things are very slow. And so for the average person, they say, well, I'm not some fancy banker at this steak dinner like you. Okay, yeah, sure. But you're trying to buy those stocks. I mean, this affects you big time. So like, if the banker is not doing a deal, why should you be doing a deal?
Okay. So the Fed is managed to hold things together, as you said, perhaps longer than even they thought they could do. But to be clear, I think you wrote in the latest edition of your newsletter, you see this all coming to a head into a major reality check before the spring of 2024. So that's coming up pretty soon. And I'm wondering what a big reality check looks like in a world where these big things like the banking crisis earlier this year seem to fade from the headlines so quickly.
Yeah, I think what's going to happen, because you've had a lot of hardship loans from 401ks. I was just reading about this today. There's people who have been borrowing this for 401k. I think the perception is that real estate never goes down and stocks like big tech companies never go down. And the fact is that they both can go down. Now, I'm not talking about crash. I'm not talking about 2008 where everything folds. I'm not talking about Great Depression. What I'm talking about is when people start getting a little bit frantic and they start saying, you know what, I'm down like on my big tech stocks and I want to take my money out. Okay. And this happens on even a large level because you might not know, some people might know this, but if you have a huge amount of assets, the last 10 years, what was happening is you get these people that manage your money at the big banks, like private client groups. Okay, now, these people are dangerous because this is like a teenage babysitter trying to raise your child. I don't mean watch the child for an hour. I mean like raise the child. Okay, and they just don't know what they're doing, and they're hard set on it. And so what they would do is they would say, Charlotte, you got $100 million over here. Like, you need to buy another house. Okay, yeah, great. We wanted a house in Aspen, so we'll do it. Okay, well, don't sell any stock because that means that we're not managing that money anymore. Why don't we do this? You have $100 million. Let's give you a $10 million loan on your portfolio, and we'll charge you like the Fed's rate, like 0% plus like a 0.5% fee. You're like, wow, that's almost free. I mean, I don't have to sell my Amazon stock, and I can buy this house that I've been wanting, right? With my partner, like, oh, it's our dream. Okay, great. So now the stocks start going down, right? A little bit, not a lot, but like just a little bit. Like 10. Well, then what happened? Interest rates go up. So they say, Charlotte, you got to, it was 0.5%, but now it's like 6. So you're like, whoa, we borrowed 10 million. We have 600 grand a year. What are we going to do? And well, stocks going down. Well, yeah, now you have this other problem. See how this goes? Okay. So the problem is a lot of these people that have serious money, they have no idea what they're doing. And the reason why they don't is because like someone else made the money. And so they're meeting quarterly and they're saying like, what happened? And well, interest rates, well, now we think they're going to come back down any day now, but they're not. So what you do is you go through the end of the year. I think we're going to have a lot of tax loss selling. Okay. So I think like starting about mid-November, you're going to see the markets get really hit because people take tax loss. So if you were down, you sell to capture the gain. And then if you were up, you might take some gains to go against it. You clean up. And everybody does this. It's a terrible idea because what happens is like the stocks that were already down, they go down more. Okay. So if you're thinking about doing this, you might want to either do it early or late because like everyone is doing it. So, I mean, like sometimes the company is not going to go bankrupt. I mean, it's just like it's down and it's going to go way down and then it's going to spring back up after. Now, if it's really a dog, then it's going to go down forever. So, I mean, that's a different ballgame. But what I'm saying is that people are going to do this because there's not really many capital gains this year. People had big capital gains for 2 years, 3 years, but now this year they don't really have that many capital gains. And so, and that because you can track the receipts on some of the Fred websites, and you can track capital gains and income tax receipts. So you track this, you realize people aren't making any money. So, okay, they get through the end of the year and they say, surely the market will come back. And then it, comes back for 2 weeks and then it doesn't. And then people start getting worried. And I think this all happens about the time that the Treasury says, we got a $2.5 trillion deficit. We got expenses through the roof. Tax receipts are down. Interest rates are up. See what I mean? This all starts, boom. It all comes to a head. And I think that's the time when you have the policy shift. And so for us, it's like, you don't really want to be trading that. Like, what are you going to do? You're going to be, I mean, look, I know how to trade that. And I'm just telling you, it's complicated. All right. So like this behind me, like this is the big leagues. I mean, you got to be professional to really move that. I mean, you try to like do that on your own. It's not impossible, but it's very tricky and it can get very expensive very quickly. And so the older I get, I want to play Babe Ruth investing, right? Babe Ruth was like eating and drinking all the time. And you just like walk up and like, if the pitch looked nice, he'd swing at it and crush the ball. But it wasn't like he was like fighting for the hit, right? I mean, he was playing like slow all-star baseball, So that's kind of how I look at things where I'm like, I don't want to fight it out over a penny. I don't want to do that. I just don't care. And I'd rather do something else. I'd rather like hang out with my kids. By the way, my kids were over this weekend and I bought them a label maker at the Office Depot, which is a huge hit for my kids. And what they did is by the end of the weekend, they had labeled everything and they decided they were going to turn my office into a store. And so they made price tags on everything. So if you see any price tags, don't be alarmed. We're not having an estate sale. The kids have just gone wild with the label maker, so sidebar note, but just in case. Well, the lamp here, the marble base lamp is 500 and the keyboard, which is a big money generator here, is 100. So I mean, it's difficult to know the logic. There's something over here for 4, but it's difficult to know kind of what logic they used in setting prices. I'm not sure there was any logic. It was kind of like a random price generator. But
Okay. Okay. So going back to the question of what investors can do right now. So you've talked a little bit about that. And again, in that latest edition of the newsletter, you kind of outline what looks like a strong portfolio for you right now. And I want to talk a little bit more about that because I think people who know you from, for example, your gold and silver commentary might be a bit surprised because you include things like energy, industrials, things that people need. I believe there's also war-related opportunities in there. So can we talk a little bit about
yeah,
that?
definitely. Yeah, I mean, I think that it's a great point because I know because I am aware of what's going on that there are a lot of people that are super frustrated with investments that I've been involved in. But what I want them to understand is that I also am very frustrated. And I was looking up today to answer someone's question, but between the years 2017 and 2022, I had 96 purchases of one particular stock and one sale, and was trying to explain that I know it's difficult that you've are dealing with a loss here, but I am also dealing with a 7-figure loss, okay? And I'm not very happy. And just to understand that, like, as an American that's on a board of a company, like, what you see is what you get. I mean, I can't trade, okay? Obviously, it's very complicated. And so I just think people need to kind of try to see the bigger picture that, like, this also can be not really how it appears. It can be very frustrating for someone like me as well. And when people are frustrated, I would encourage them to contact management of the company that they're frustrated in and ask management for an explanation of what's going on. Now, it's difficult because as a director of the company, I'm not a member of management. Okay, so it's kind of like if you have a bad meal at the McDonald's and you go immediately to the guy that's on the board who has like another day job, and you're like, I had a cold French fries and I'm upset about it. The guy, you know what he's gonna say to you? Did you talk to the manager? Well, no. I drove all the way to Illinois to the office to talk to you. And the guy's like, I'd love to help you, but I mean, like, I'm on the board, okay? So I mean, I'm gonna call the manager. That's what I'm gonna do and ask him what's going on. So that's what I do like every day is I have some person that's in like a spitting tirade, and I try to explain to them, like, have you talked to management? No. Well, why don't you talk to management, right? I mean, they would love to talk to you, okay? And I'm happy to talk to you after, but talk to management. Okay, so back to the portfolio. What people don't understand is that I'm managing a trust, and my job managing the trust, it's like valet parking someone's Ferrari, okay? It's my job to park the car, but it's not my car, right? So what am I going to do? Well, I'm not going to buy micro-cap stocks that in a time when the market is getting drained of cash. I'm not going to do that because that's like saying I'm valet parking your Ferrari, but I'm also going to like go at high speed to see my girlfriend and then come back and pick up a pizza on the way back. Okay, I'm not going to do any of those things. All right. Now, people need to understand I have a strategy here, right? And my strategy is I want to buy things that I think are going to remain stable during a time of instability. And that doesn't mean like super boring stuff. I mean, we're not buying IBM here, okay? So like we have some stocks that are like a little edgy, but we have balance in the portfolio. We have balance. We have energy stocks, but we don't have energy producers. We have companies that are high demand for certain parts of the energy business that are very interesting, that are very low debt, and seem to have minimal competition. And we feel like we'll get through this tough time and we'll still have that company. And then we have things that we feel like the U.S. can't do without, like in the war situation, things that like you can't duplicate, that the U.S. can't deal without. Maybe they go down, but they are like businesses that can't be replicated. So anyway, so yeah, I mean, we have kind of like 5 tenets of direction, and that's how we set the direction. And what I'm showing people is that you subscribe for a while, you don't need me anymore. And the reason is because I'm showing you how I think. I'm teaching you how I think, and I'm just going to teach you that. And then one day you're like, I don't need this guy anymore. I've got all his tricks. So I think some people like that, and I'm the kind of person that likes that. I like someone to say like, "Hey, I'm not just going to tell you the stock. I'm going to be like, this is what we're doing right now because this is what we think is going to happen." And we could be wrong, but like if we're wrong, we're going to come back and reference this and be like, you know what, we didn't see coming. We didn't see a plague. We didn't see a plague coming, for example. Like, how could we have seen that coming? It's impossible. So when you have an error like that, you're going to go back and revisit the facts as you thought you saw them at the time and blah. But we have no gold stocks. I mean, I have my gold dealer in there. I have one gold dealer listed with his phone number, his personal phone number. And I asked him if somebody calls as a subscriber, like a paying subscriber, to take very good care of them and to, not let them buy things that are kind of a ripoff, like tell them you're interested in selling them like basic things and you're willing to give them a great price. But the reason why is because like gold is not, to me, an investment. I mean, a lot of people, they have a really hard time with this, but like, I don't think gold is an investment. I like gold a lot. I've always liked gold. I've always wanted to have a little bit of gold, and I've always seen it as like something that you accumulate over time so that because Charlotte, I know it's hard for people to understand, but like I started my career, I didn't really have very much money. I mean, it was like I was like dirt poor, but like when I was working, the number one thing on my mind was I don't ever want to be this hungry again. Like, you never know what's going to happen. And even if I'm like I remember my first job, like doing construction, I was saving some of the money and buying Exxon stock, like $50 a month. And it sounds so crazy to think about now, but I remember I got a better job and I had to move, which cost me like $1,000. I had to move out of state, and I sold the Exxon stock. I had like 500 or something, and then I had like a manageable amount, and people don't understand this. It's like they want magic to happen, and it's like, look, it's not magic. Like you're gonna what's gonna happen is you're working really hard, you're trying to invest to get ahead, and sometimes when you do get ahead, it's important to like permanently save some of that money so that you don't end up in the back of the food line starting over. Because I'm telling you, like, I'm not as young as I look, okay? And like, what you don't want to do is go back to construction in your mid 40s. Now, don't get me wrong. I don't have anything. I have a construction when I was younger. I appreciated the trade, and now construction workers make a fortune. Okay, so I'm not saying anything bad about the construction trade. What I'm saying is that stuff is heavy, and like, your knees start to hurt, and you're just like, you want your life to progressively, get better, where you're the manager of the construction site, okay, or the owner of the construction company. There we go. But my point is that you don't want to start over as like a laborer. It's really difficult. It's hard. And so that's why I liked gold, because I felt like gold was a way for me to protect my hard work. That's how I always saw gold. And so I didn't see it as like, oh, I'm going to buy a coin and it's going to go up. I'm like, it's going to go up 10%. Like, it's not like I'm going to sell it. So if it goes down 10%, I'm like, yeah, I'm just going to buy a coin every month or whatever. This is like early days. E.B. Tucker, like driving a Ford Ranger around, like working and, basic, right? I mean, gold was like $400. Come on. So my point is that like, I don't see gold. People need to understand. I write about that. I wrote a whole book about that, as you know, but I mean, I do in the newsletter. I'm like, look, don't be getting crazy with gold. Like, I mean, I like to have some, and I think it's really sensible, but like, here's how I do it. Here's my guy, you call my guy, and you don't have to do business with him. You can go online, compare the price. I mean, it's super easy. If you're going to buy a US Eagle, what's the price here? What's the price here? Okay, I'll take the lower price. I mean, the Eagle's an Eagle, right? I mean, but anyway, but people need to know like what some options are so they can compare all those options. And so that's something we do in the premium side of the letter. It's very important.
Okay, so no gold stocks in the portfolio, but gold as a store of wealth, as we've talked about many times before. So I had in my head that I was going to ask you about the trajectory for the gold price during all of these circumstances. And I'll still ask you about that, but I guess keeping in mind that the price is not necessarily the most important thing.
Well, maybe not the most important, but it is still, I mean, obviously we don't want to buy gold and then see it knocked in half, but I don't think we will. I personally think, I mean, right now, let's see, this moment, 1924, we had a big day on Friday. I personally think that the gold price is set to move 10%. Like, I think it's going to, 2150, maybe up to 2200 in the next 90 days. And I think that because what we saw recently was we saw all the indicators that show the same move that we saw in 2018, 2000, early 16. We saw this like huge dip down that didn't make any sense on high volume, and then an immediate back to where it started. And usually when we see that, we know that the downside is over. And it's really tough for gold with high interest rates. A couple of years ago, you would have said, what happens when interest rates go to 5? You'd be like, gold does not do it. It doesn't move. You would have definitely said that, right? Because that historically, the correlation is that the gold price moves opposite of interest rates. But what are we seeing? Gold is held in there pretty well. I mean, 1925, okay, so we're flat for 3 years when interest rates went from 0 to 5.5. Wow. I mean, that's pretty crazy. And in every other currency except the dollar, it's at an all-time high. So, I mean, look for 10%. Let's look for 10% by the spring. How about that? And then you can have me on and throw tomatoes if I'm wrong.
Well, if we'll check in with you then and see what's going on. Any thoughts on silver as well? Just quick thoughts on silver because, we've had gold at historically. Go ahead.
Yeah, it's a problem. It's a problem. Silver's a huge problem. I'll tell you why. Because you sit there for like 15 years and it's at the same price. Okay. And I'm close to the silver business, right? Of course. Like, I mean, I have like immense amount of experience and, big giant blocks of it and all this, like I've been to all the mines, whatever, all this stuff. Traded the futures, options, coins, everything, stocks. Problem with silver is 15 years, same place. Someday it's going to go up to like $100, but who knows what day it is? And so it's impossible because if you have a futures trade on when silver goes bananas, you're going to make so much money that you'll have a yacht in Cole Harbor that's called like the silver dollar or something, and everybody will point at it and say you're the smartest person alive. But it could be in a month, it could be in a year, it could be in 5 years, it could be in 10 years. Nobody knows. And it goes so fast that nobody trusts it. So I cheer for silver from the sidelines. I want silver to win. I know that it's going to go. Somebody is going to catch it when it goes and make a life-changing fortune, but it's not going to be me because it's too hard. And I know this because like the silver went to 30 in 2021. So I was like heavy in I had like big futures and options and I had this big trade going. And it was like, it started to go, and I added to the trade and it stopped going. I mean, it's just like, it's too difficult. It's $22. I mean, like $22.91. Can you believe it? I mean, honestly, an ounce of silver, $22. I mean, it's like, I probably have one here. It's like, a couple of these on the desk here just for fun. But I mean, $22. You pull that thing out of the ground, melt it, stamp it, $22. I mean, it doesn't make any sense. Seriously, it's like 1/90th, maybe 1/85th the price of gold or something. And it could go, I'm telling you, like the market for silver. Okay, so in gold right now, the futures market in gold determines the price. There's about $120 to $125 billion worth of gold futures trading right now. So silver, there's like 10, maybe 12. So it's like 1/10 of the liquidity. And what that means is that when silver goes, there's nothing to slow it down, right? It just goes like totally bananas. I mean, like one day it's going to go, and it's like, Charlotte, it's going to make your head go up and spin all the way around. Your ponytail is going to go flying in the air. That's how crazy it is. That's how crazy silver gets. But the problem is the when. It's extremely difficult. It's extremely difficult because to keep those bets is expensive. Like it's not like, I mean, because what good does it do you if you buy 10,000 ounces of bars and then it goes up $10? I mean, it's not really like, I don't want to trivialize it, but it's only 50%, right? I mean, then you got to I'm telling you, I have a lot of silver. It's extremely difficult to store it. It's like, it's too much. Like you have to put it all over the place. And people, it's just like, it's in the way, to be honest with you. Okay. So it's really hard to do that. So you kind of have to do it in a big way with like futures and options on futures and all these things. And so when you start doing it, and it's expensive. You got to like really stay on top of that. It's going to cost you money to keep the way you go on to, I mean, look, this thing, I remember 2011, it hit 50. And in the fall of 2011, it was like 33 or something. We thought it was cheap then. And then during the plague, it was like 11. Remember this? It's crazy. It's down 65%. I mean, who would have been able to hold on that long? So if you successfully trade silver on this upswing that comes, E.B. Tucker says that you are incredible. And hats off to you because it is not easy. And my only advice is if you do that, if you catch that wave, if you really catch that wave, probably hang up the surfboard because it's very hard to do it twice.
Okay. Appreciate the thoughts on silver, definitely. And, I feel like I have a much better idea now of what you're up to, what you're thinking. Before I let you go, just any final thoughts that you would leave investors with right now?
Be patient. If you're going to tax loss sell, do it early or do it late, but not with the herd. And look out for first quarter is probably the time when everything hits the wall. And so if you can be in T-bills at 5.5 or high yield savings account or stuff like that, there's something to be said for that. Don't worry about if the inflation feels a little higher. It's nowhere near as difficult on your stomach as being involved in things that, you putting your stocks in a microwave. You don't want to do that.
All right. Okay, this is really good. Thank you so much for coming to talk about what's going on in the markets with different commodities. I think the audience always really appreciates hearing from you. So thank you very much.
Thanks for having me, ebtucker.com, and I can't wait to come back and see how we turned out on the gold price.
For sure. We'll be checking in with you at that time. So once again, I'm Charlotte McLeod with investingnews.com, and this is E.B. Tucker with the Tucker Letter. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.